And Valerie, we watched what happened last week. Earnings were pretty good, and even the strong performers were not getting much in terms of rewards in the stock prices. Why do you think that is?
Right. It was a very strange earnings season. As you mentioned, 71% of companies actually beat estimates by more than one standard deviation, and that's usually rewarded. But in this instance, it wasn't. I think there are a couple of reasons for that. One, there's still a lot of uncertainty as it relates to the evolution of the virus. I was just listening to your previous speaker describe the uncertainty around vaccines. And the uncertainty around COVID-19 means there's still uncertainty about the pace of economic recovery and the sustainability of corporate profit. So, and that's all reflected in the VIX. You mentioned that the volatility is up, and that's really, I think, what's reflected there.
Valerie, is part of it just that we've seen the market run up so far, that all the good news was baked in? It's only going to be a sell-off if there's bad news, and really not much room for upside at this point?
Well, I think that expectations may have gotten ahead of where they needed to be, but you have to recall that early in 2020, there was a lot of uncertainty about how the pandemic would evolve and how the economy would evolve. And I think that, many companies actually suspended guidance, and people were kind of driving through the fog, so to speak. And so I think that maybe the expectations were simply too high. But when we saw the pullback, I think it was by and large an opportunity to kind of buy on the dip, if you will.
We've been talking an awful lot about Reddit, the traders there, the retail traders there, and what it's meant for GameStop and other stocks. Is that what you're hearing from your clients, or are there other things they're asking you about?
That is not what I'm hearing from my clients. My clients are generally focused on responsible investing, and they are very passionate about this. And as responsible investors, they're really focused on a longer-term time horizon, and they're focused on the underlying drivers of corporate profitability and company performance. So things like the investment implications of climate change, they're very much focused on pay equity and other key performance indicators related to diversity and inclusion, both at the board level and the company level. And they are really focused on how companies conduct themselves with their employees, their suppliers, and their customers. So those are the inquiries that I get from the clients who are invested in my strategy. And again, they are squarely focused on responsibility and sustainability, which I think is an enduring investment theme for 2021 and beyond.
Shepard Smith here. Thanks for watching CNBC on YouTube.